my quick takes on some stocks that I'm analyzing now on my research platform, as I do every stock of the FTSE index. The stock I want to discuss today is Glencore, which is one of my businesses that I have been following for a few years now. Then, when it was very cheap here around 160, we bought on the research platform and then later sold in two parts, even pretty high. Of course, not at the top, but really good returns there. Now you might think, Sven, you sold, but now the P ratio is 4 and the dividend yield is 8%. Everything looks great. The company is merging with Teck, another interesting business. But again, I prefer to buy low with very low risk and then sell when the risk, or let's say the company, is fairly priced. I looked a little bit at their presentation and they are discussing the merger with Teck, but synergies, there are very little synergies in the mining business. It's a mine, it's where it is, and these promises, I think they just bought the promises from some investment bank that discussed the acquisition for them. And the valuation re-rating over time, now you can get the valuation that Teck had where it goes up, or Teck can go the valuation that Glencore had, because if you look at Glencore, it's not a nice business. It has a shady history. There is always something mining in Africa, and therefore it deserves a lower valuation compared to Teck. But all in all, the distributions of 10 billion look great now, but this is from an exceptional environment with higher coal prices, especially. So I always calculated that Glencore makes around 5 to 8 billion per year, and therefore, let's say if we take it conservatively at 5, we are now at a P ratio of 10, which is a fair price for Glencore. However, I'm looking now at the cyclicality, and you can see here 2021 was a great year, 2022 was an amazing year, and if you look at the free cash flows, those were half what those were in 2022 in 2021. So in a normal year, in a recession year, this can easily be 7 billion or even less. Now, there is something else when discussing Glencore. The previous management was killer shark management. They would go into Democratic Republic of Congo, bribe people, do whatever was necessary to get their business. Now, they have replaced their management with good management, nice people, but nice people do exactly this. They go to Canada and acquire Teck at whatever price. I think as it is a merger, I think that Teck investors are getting the better hand of it, because when they will merge, I think I made the calculations in the past, average free cash flow when Quebrada Blanca will be completed around 2 billion. If we go to Glencore, it's 8 billion, thus 80% 20, but Teck shareholders are getting more than 25% of the equity, which is, okay, a transaction in my eyes just to perhaps make the company look a little bit better than it is to clear its reputation by adding something that looks better, at least on paper. So, in my valuation now, it is fairly priced for a 10% discount rate. And of course, that was an exceptional year. If it comes back to the standards of 5 billion, it might not come back. It might make more money continuously, but in a recession, it will make little money. And then it will be the time again to look at the company after merging with Teck, if they get all those things approved. And you can see also Teck higher costs a little bit there in production for some things, and therefore extremely volatile. And when are they acquiring Teck? Here, not here, not here. Of course, also Glencore was in big trouble here. So I don't like this. Buying here and talking about synergies in a mining business, well, sorry, my Glencore, I will wait for both of you to be cheap again, and then I'll make again my 2x like I did in 2020. Until then, we'll be checking other companies, check my research platform for what I own, and I'll see you in the next video.